Determining resident status for corporate tax purposes, specific rules for natural and juridical persons. The UAE corporate tax law includes specific criteria to determine whether individuals, natural persons, and entities, juridical persons, qualify as resident persons for corporate tax purposes. This classification is crucial because resident persons are taxed on their global income, whereas non-resident persons are taxed only on income sourced within the UAE. The rules ensure clarity and consistency in identifying which persons and entities fall under the UAE's corporate tax framework based on their residency status. 1. Determining residency for natural persons. Natural persons, or individuals, are considered resident persons if they meet the following conditions under the corporate tax law. Place of residence. An individual may be deemed a resident person if they maintain a primary residence within the UAE. This means that their habitual place of living and primary personal and business connections are located within the UAE, making the UAE their center of life and activities. Physical presence. The residency status of a natural person may also be determined by the amount of time spent physically within the UAE. For instance, a person who spends a specified number of days, commonly set by immigration and tax authorities, within the UAE over a calendar year may qualify as a resident person for corporate tax purposes. UAE-based business or professional activities. Natural persons conducting substantial business or professional activities in the UAE may be classified as resident persons. This includes individuals who operate a sole proprietorship, provide professional services, or are involved in other significant economic activities within the UAE. Their regular business operations within the country establish a connection to the UAE that meets residency requirements for tax purposes. 2. Determining residency for juridical persons. Juridical persons, or legal entities, are subject to distinct criteria to establish whether they qualify as resident persons under UAE corporate tax law. Incorporation in the UAE. A company or legal entity that is incorporated in the UAE is automatically considered a resident person for corporate tax purposes. This rule applies to businesses formally registered within the UAE's jurisdiction, including limited liability companies, public and private joint stock companies, and other forms of registered entities. Effective management and control in the UAE. Foreign juridical persons, entities incorporated outside of the UAE, may also be deemed resident persons if they are effectively managed and controlled from within the UAE. Effective management and control refer to the location where key strategic and operational decisions are made, such as the headquarters where the board of directors or equivalent governing body meets. If these significant decisions are regularly made within the UAE, the foreign entity may be classified as a resident person, thus subject to UAE corporate tax on its global income. Importance of resident person classification. The classification as a resident person has significant tax implications. Global tax liability. Resident persons are generally subject to UAE corporate tax on their worldwide income, including both UAE and foreign-sourced income. Double taxation relief. For resident persons, the UAE corporate tax law may provide mechanisms to relieve double taxation, allowing for credits or deductions to avoid taxing the same income in multiple jurisdictions.